So I had a great question about how I see interest rates playing out in 2018, 2019. Well, the first thing is I think interest rates have gone up 0.25% this year in the UK. And I don't expect anything else to happen, because what the Bank of England will want to do is want to see how that plays out now. Because I think the important thing here is, that they want to raise them slowly, okay, to what I'm calling normalising them. What is normal now? Well, for 10 years they've been very low, so you could say that's the normal. I don't think that's the normal. I think actually we've been recovering, and now we're starting to get back onto an even keel, and I think that's why they're raising them incrementally, bit by bit by bit. And I think, to be fair, that's how 2019 is going to play out. Do I see, we've got Brexit coming, so we'll see what happens with that Brexit. A number of things could play out. If Brexit turns really badly, we may see inflation go up, because of the added costs of things. But then by the same token, the economy could slowing down, and that could really play into a stalemate where, if inflation goes up, they'll want to raise interest rates, but if the economy's taking a dive, then what are they likely to do? The reality is I think they're likely to still incrementally raise rates over time. So do I think they're going to raise very much? I would say in 19, I would say somewhere between, 0, no rising. I don't think they're going to drop them. I think no rise and perhaps 0.5%. So not a real massive effect. But what I would say is this: you need to look at your portfolio right now and make sure that you can afford, let's say, 1% raise in interest rates. Because if you think about it, that's quite a significant increase in rates, and certainly the pay rates that people will be doing, that will really clamp down 1% on the economy. So that's my sort of take for 2018, 2019. What do I think in 2020? Well, I think, to be fair, we'll see what happens with Brexit. And this is really, if we talk about a fan diagram, it could be very good, it could be very bad, and it's anyone's guess. And I think anyone that says they know what's going to happen, they just don't. They're gambling. It's like roll the dice, and you might get bet on black and it's black. I think really, it's almost imprudent to try and predict what's going to happen, because there's so many variables. All right. Now, as an property guru, you might sit there and go, well, this is what's going to happen. And you know what? Good on them if they do that. Fantastic. But that is a gamble. That is not because they know what the hell they're talking about. Nobody does. The important thing is, how will it affect you? So what you need to do is look at, I talk about the worst case scenario, which often I don't think ever happens. The realistic worst case scenario is what I consider can happen. And the realistic worst case scenario, I think, is interest rates go up 1%, okay? I think that's probably the most that they would go up. So can you afford the cash flow change in that? So have a look at your interest only, have a look at your principal interest, have a look at, if interest rates rise, which ones are fixed, which ones are variable, all that sort of stuff. Work it out. Work out that cash flow. If you don't know how, give my team a call and get them to run through a cash flow and get it all onto a spreadsheet, so you can see very quickly if interest rates change by this much, how that affects you, okay? I have a spreadsheet which will work that out really, really simply. It takes no more than an hour to get all your data on there, and you with absolute certainty about what that means, okay? The other side is if Brexit turns really poorly, because the thing is, if prices are going up and your wages aren't catching up, then it's going to cost more. So what you're going to look at doing, and I think if you have a lot of debt load, whether it be credit card debt, household debt, whether it be investment debt through, mortgages and things like that, you got to look at that, because there's a lot of changes happening. Rents are likely to increase, okay? But with the same token, the costs of holding your investments are likely to increase because of things like tenant fee bans, mortgage restrictions, and a whole range of other things. So you've got to look at all those things, and I think now is the perfect time to really look at that. So guys, that's my sort of predictions for interest rates over the next 2 or 3 years. That third year, after Brexit, I have no idea. I mean, I could make a prediction and maybe I'll get it right, but that would be a total roll the dice gamble. And you know what? You can make the same prediction and you've got exactly the same accuracy as me. So that's my take on things, but I think maximum 1% next year, okay? And we'll see, I'm cross fingers hoping that Brexit works out better for everyone, and that the EU see it as, actually, we don't want to damage ourselves, we don't want to cut off our nose to spite our face, and same with the UK. One prediction I do think is, I think May's got to get out, May out, May get out. I really don't think she's inspirational. She's not, effective. Nothing, and that could cause more elections. Who knows what that's going to do? But I doubt it. I think they'll hold on to power until after Brexit goes through. They don't really want to have an election in between. I don't think that'll help anyone at all. Anyway, guys, have a great day. Remember to subscribe to my channel. Comments, if you've got any comments, any questions you've got, chuck them into the comments section and I'll be happy to answer them. All right, have a great day. Live with passion.